Hello, traders, and happy Tuesday to you. It's 8 a.m. Chicago time on the 30th of August, 2022. This is episode number 2304. Thanks for joining me today. Hopefully, my voice or sound is not blowing out your speakers. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, mild risk on as we see a slight bid across the board. German DAX pushing higher. The DAX is benefiting from a little bit of good news. The German inflation rate, which came out at 8 a.m. Eastern, came in at 7.9% versus 8% expected. The prior is 7.5. The month-on-month prelim, though, for August came in at 0.3 versus 0.5. 0.3 versus 0.5 expected for August. And also the economic sentiment out of the Eurozone in August came in at 97.6 versus 96.3. Additionally, there's news that Europe successfully has filled up on natural gas needed for the winter. Done a good job of doing that. Natural gas, just as a reminder, there it is, your daily natural gas. Just an insane move this year from about $3.50 to $10. $10. That's pretty crazy. But this is expected. This was expected to be the big drag on Europe. What does the ECB do? I mean, if the Fed is in a bad place, the ECB is in a much worse place, and that's why they haven't really done anything in terms of fighting inflation, because the price of energy is already likely to sink the ship there. So good news out of there. ECB also yesterday came out and said, one of the ECB governors or whatever said that the ECB is pushing back against 75 basis point hike on the next meeting. Again, softer German inflation and markets holding for jolts today. The job jolts figure is a major number because it represents the employment market. And remember, the Fed has two mandates, inflation and employment. And this is the employment component. Jolts have been very, very hot, running at about 11.5 million open jobs in the U.S., unfilled open jobs. Today, we're expecting 10.5 million. And the way this comes out informs the Fed a little bit better about how these will perform. Here's the jolts figures and how they've transitioned over time, just to get an idea. Look at where we're coming from. Look at it from 10 years. The number I always remember is somewhere around 4 to 6 million open jobs, and you could see that it really has pushed a lot higher recently, and as high as 11.85 million jobs. It's a lot of pressure on wages, on wage growth. So this is one to pay attention to today. That's coming out at 10 a.m. Eastern. We just got the Case-Shiller numbers. Home price numbers came in at 18.6%. Home price is rising year on year as of June, 18.6% versus 19% expected. And then going forward, we do have consumer confidence also at 10. This used to be major. It's not currently. Feds Williams at 11, and crude oil stock change at 4:30 p.m. Eastern. Retail sales out of Japan, industrial production out of Japan, and then the next big number is out of China. NBS manufacturing PMI for August this evening at 9:30. If you happen to be trading the Asian session, this one you need to be aware of. In terms of earnings, we had Best Buy this morning. Best Buy came in and beat by 21% on the earnings number, and just under 1% on the revenue number. So they're showing more profit per unit of revenue. So they're getting a pop. Bank of Montreal, BMO, came in almost in line. And then Baidu came in 44% higher, came in at $2.36 versus $1.63 on slightly lower revenue, so more profitability per unit of revenue. And then after the close today, we have both Hewlett Packard's, HP Inc., and the other one, whatever it's called, but there are two Hewlett Packards on the NASDAQ. Both of those come out after the close. That's a major player. And then we also get Chewy, which is the pet product company, expecting about $2.5 billion in revenue. So that's what's on deck in terms of earnings. One thing I'd like you to pay attention to here is the rotation figures. Let me choose a better color than white, huh? Let's start there. Hey, how you doing? All right, here. These numbers here were updated yesterday. We're seeing the S&P rotations collapsing a bit. We're seeing the NQ falling a fair amount. We're seeing the Russell remain pretty much unchanged. We're seeing the Dow pretty much unchanged. And we're seeing crude pretty much unchanged. But this has dropped from 9 and 10 and so on a few months ago, has been slowly creeping. We're losing about, in terms of rotational volatility, rotational range, we're losing about 2 to 3 ticks per week as the market kind of slows down. So just be aware that that these numbers are changing. The range is also coming down for both the NASDAQ and the S&P. It didn't for the Russell, it did not for the Dow, and it did not for crude oil. Down to the S&P. The S&P has a multi-distribution profile today, 243,000 contracts traded. 91% of the overnight inventory is long in the S&P with a pretty decent range. 46 points this morning. The S&P has traded, giving us a clue as to how active the day session is likely to be. Notice crude is coming off. Crude had a stellar day yesterday. It was up, I don't know, 4% or something. Quite a bit. I don't remember the exact number. It's in my homework notes. But it has pushed quite a ways. And the key number in crude to pay attention to above is $97.92, key test area above. But crude really broke one Vol Sigma up and put in an impulse up day today. So it may be just resting this morning. But overall, crude has been on a tear, just a very, very fast moving and pretty, in my opinion alone, it's not suitable for all investors. My opinion, a relatively decently tradable product. I would recommend, of course, if you have not traded crude and you want to foray in that you trade the MCL, the micro crude oil contract, which is $1 a tick. So that's that. Let's take a look at yesterday's expectations. This is from yesterday's broadcast, episode number 2303. The primary scenario is an open auction. It might dip, go into the prior range, give us the prior settle statistic, and then basically sit sideways, right? Expected it to sit sideways below the 40-50 in the 40-40 range. That's your primary scenario. The secondary scenario is one that pushes into the prior range, gives us the prior settle statistic, and then holds the prior range. In that case, I was looking for a continued push towards 40.98. The third scenario is a push towards 40.40, fails, an impulse down, breaks the overnight low, and in that case, expected a runner down to 39.90. 39.80. Okay, so those are the three scenarios. The main one being sideways, push higher, close the prior settle statistic on an open auction and then sit sideways in the 40-40 area. Here's what actually happened. Let's go to the active chart. This is what we got. So this is yesterday here. The blue is RTH. This is where we were from here to the left is where we were before the open. The open is at 8:30 my time, Chicago time. The blue profile is RTH. So we open it in an open auction, back and forth, back and forth. It finally drops. All right, I expected it to have an open auction and drop. It kind of open auctioned higher, made it a little difficult to trade, and then it finally breaches and gets to the prior settle price, and then it falls off and it finishes at 40.35, 40.31 being the prior settlement. So this is scenario one, almost on the nose. Again, push into the prior range, test the prior settle, and then fall out of range and finish somewhere in the 40.35 area. It finished at 40.31. So pretty much on point. Yesterday we had the small lots dominating buying, large lots dominating selling, very large lots basically on vacation, not participating at all, and a relatively choppy and noisy trade, in my opinion, until the close. I didn't really see a decent setup till right here. Right here we have zipper, a clear high, lower high failure, breakthrough, pull back, about a 1.5 of heat here on the short, and looking for the open 40.28. It couldn't get the open. It missed it by a 1.5, but still about 13 points of range to the downside. Earlier in the session, I just didn't. I saw this as a very, very choppy session. I didn't see a lot of good setups and so on. We did end up going neutral, so we broke the IB low, and we held this 1650 stock zone key area there from the last time we were here. Held the 1650 stock zone, pushed through, and then went neutral. In other words, touched the other side of the initial balance, and then squeezed into the prior range. So until later in the session, I just did not see a clear, just for me personally, setups weren't coming to me. I'm sure there are many, many scalp opportunities in here or whatever, but there's no point in discussing those. What has happened since? Basically, an open auction in the overnight session. You can see it trading up and down, and then it took a bid. And then what we've done is we've held a bid for the entire session. We have a weak high up here at 40.7275. We put in a high of 40.7275 there, and then we pulled back and put in another local high at 40.7275. So we have a local double top here. We need to keep an eye on this. This is a weak high. Market moves away. It moves through the full session VWAP, full session mid. What is this telling us? It's telling us that the short time frame is not in control. The point of control is way up here, and we've moved away. This is indicating to me early on that this is likely to be a messy open, a non-directional kind of swing across the range kind of open. We would expect, if the dominant participants are day time frame participants versus intermediate versus long term, we would expect some response, some respect for the day levels, and we have not seen that. So to me, this looks like, and give it, the other piece of evidence is weak high, multi-distribution profile. So the market's actively seeking balance and is not finding it. This is likely to rip through levels early on. So that's a word of caution to everybody. that this morning when it opens, we're opening in range of yesterday. We're pretty much opening in value, and it is likely to have a wide discovery range. So if you get chewed up on the open and your stops get hit, then you see it come back to your entry, then see it go to your target, and then you get upset, and then you take another trade, and it stops you out. You see it go back to your entry, and it goes back to your target, then you're the fool, because you are already warned. The market has already spoken and has told you that it is swinging wide and it's trading from the outside in. So let's take a look at what has happened over the last couple of days. Here's our kind of a weird Friday sell-off with a very poor low. Here's yesterday closing that low. So it went closed the gap zone that was left behind from the overnight session. It closed this gap zone here, did a good job, and it could not hold on to the prior range. What we saw yesterday is a prongy but pretty much a balanced profile. There was no the market was responsive as expected, exactly as expected. It was responsive, returning to the prior range, but it could not hold on to that prior range. And so what we have is a market that is just actively discovering to the low. My expectation is it's likely to test even lower, because this move right here hasn't had its continuation move. We've had a bit of a pullback, not much of a pullback, nothing to speak of, and the expectation is it's likely to have its next leg down. Okay, so let's look at this in a TPO format. Here's what's been going on. See this? These shaded areas, those are single prints. They were called single prints in market profile. Poor structure. We opened at the high, at or near the high on Friday. We closed at the low. This is a pretty aggressive selling day. This is likely to get an additional day of selling, and this is why I'm expecting us down at 30.90 soon. Look at the profile of yesterday, completely balanced. Point of control is the point of control is exactly where we are now, 40.43. We're opening imbalance, in range imbalance, and with a clear just swing back and forth. This is likely to be a noisy open. This is what I want you to take away. So we're still below the key balance, which has a point of control of 41.22 now in volume, has an extreme of 41.75. It is really hard to write on the screen with a mouse, but here I am doing it. I just love to torture myself. 40.75. So that's your range. That's the balance range. This balance range occurred in August, and it occurred in May, June. The exact same. Okay, the market loves this area, but we are not making any headway coming back in there. We're likely to advertise prices lower to find those buyers that are likely to bring us back into the 41.21. And there's a lot on deck that is that supports a push back into the 41.22, 41.40 area with the stimulus, the fiscal stimulus that's been put out there, $500 billion or so, and so on. So to me, this looks, we're, in other words, we are, thank you. We are really just sitting around waiting for this thing to break to the downside, in my opinion. This is an unresolved sell-off at the moment. The auction has not found its buyers. If it did, it would have taken back some of Friday. We've seen that before. We've seen big selling days that take the trade back. Here's what that looks like. Balance, extend, and then take it right back, right? So we're not seeing any of that. So that's what's on deck for today. Looking at this from the perspective of combined profiles. So these are all combined profiles. In fact, let me combine this one in. So from the perspective of combined profiles, balance, balance, below balance, and we're holding steady down in this area. And so this is to me, this definitely is not a done deal. So we're likely to continue down to 39.90. I keep saying 30.90, but that's 1,000 points away. 39.90, and then we're expecting it back in this range at some point. We'll see how that works out. So that's what we're looking at for today. Looking at the intraday chart again, what are we expecting? In terms of trading today, trading plans. Well, let me remind you for a moment, tomorrow, I'm going to be on the Futures Radio Show with Anthony Credelli and my friend Scott Andrews to talk about man versus machine. Man versus machine. It's a panel discussion about trading algorithmically versus trading discretionarily. And you know, I'd love to have a debate, but in this situation, we're talking about how trading algorithmically can actually be a supplement to trading discretionarily, the pros and cons of each. I think everybody's going to benefit from the discussion. Scott Andrews has been trading, is a longtime trader and has been trading algorithmically for a while. So we'll talk about robustness and things like that. And in the process, we're giving away three drones. You can register for those. The deadline to register for those is 11 o'clock tomorrow, 11 Eastern. Tomorrow's the deadline cutoff. If you register past that, you will not be included. And you can go to edgeclear.com/deli to find out about that. So back to this. We are going to look at what's expected for today. For today, we're opening in range, in value. Oops, let me change the color. Mine going. Okay. This morning, in range, in value, open auction. I'm expecting this thing to move towards, we're opening in range and value. Statistically speaking, we have a high probability of tagging the prior day's point of control, which is now the current day's point of control, the overnight point of control shifting down against the prior session's point of control. So that statistic will get tagged right at the open, but I'm expecting us to test the prior session's value area low, and I'm expecting us to move back and forth. We've got the JOLTS number at a half hour after the open, so that's likely to give us an idea of what direction the market's likely to move. Past that, in my opinion, this is likely to chop and push down at some point. We did fail to take out this stock zone here at the 1650. So this becomes the first key obstacle to selling, but we had a very clear test of the prior range this morning and failed. We had a very clear test of the prior range yesterday and failed, and I'm expecting them to try again this morning, and I'm expecting them to fail. There's just no support on the buy side so far. That is the evidence that's in front of us, is there's no support to the buy side. The secondary scenario is an open auction, same thing, except it pulls back to the 1650, pokes it, does not find aggressive sellers below there. You have your impulse up, and this creates a much more interesting scenario in that we're back at the open, and now it might squeeze to the 40.80, 40.90 that we talked about yesterday. That's scenario 2. That's the market basically defining that it has tested and found buyers, and once it finds buyers, the structure inside of Friday's range is pretty weak, and we're likely to find ourselves up there near the 4,100 fairly quickly. Okay, those are the two key scenarios. The primary being just chop, test up, fail to hold higher prices, and therefore the auction is likely to force an advertisement down to push prices down and start to look for those buyers down in the 30.90 range, 39.90 range. That's what we're looking for this morning. The secondary is open auction. Hey, we want to sell off. They get down to 1650. They poke through the 1650, unable to find continuation. So we have a probe and reversal. The reversal is likely to see an impulse. So as soon as I see an impulse to the buy side, I'm staying off the shorts, and now I'm targeting the selling day's low, Friday's low, and then I'm looking for yesterday's high to be breached, and then I'm looking for 40.80, 40.90 to the upside. Those are the two key plans for today. Our job now is to sit there and wait on our perch for our prey to come along instead of going out and chasing it. So I'm not going to look for setups that validate these. I'm going to look for the market to validate these and then trade my setups with defined risk reward for sustainable professional career trading, which is what we're here for. I was going to talk about expectations again. I want to reset expectations and remind everybody, but you know what? I'm out of time. Good luck, and don't forget to register for the giveaway and attend tomorrow's Futures Radio Show. Take care.